C3.ai's stock is up a whopping 112% so far year to date in 2023. Is this increase justified? I mean, yeah, the artificial intelligence company has benefited from the recent surge in popularity in artificial intelligence since OpenAI's launch of ChatGPT in November has shown how incredibly useful artificial intelligence can be. Further, C3.ai is going to launch its own generative AI product in March, and that's got investors overly enthusiastic about this company's stock. It's already up 112% in a little over 1 month. So let's take a look at these companies' fundamentals, and then let's determine if this increase was justified. Starting with its revenue over the trailing 12 months, yes, revenue has been growing nicely, but it's kind of flatlined. And in fact, according to Yahoo Finance, in its upcoming quarter, C3.ai is expected to report a revenue decrease year over year. So revenue growth has slowed for C3.ai as well as many other tech stocks, overall growth stocks, as enterprises have kind of looked at places where they can reduce discretionary spending and cut spending whenever they could to deal with these macroeconomic headwinds. Finally, look at the company's operating margin. On the trailing 12 months, it's just going absolutely downward. It's going in the wrong direction, even though the company's reporting very nice revenue growth and has increased its revenue over time. It has done absolutely nothing to help its operating margin. Typically, you like to see growth leverage fixed costs, fixed expenses, and deliver some kind of economies in scale where you see at least the margin getting better, not getting worse in the case of C3.ai falling 92 to 92.33% in the trailing 12 months. Finally, look at the company's cash flows from operations in the trailing 12 months. Like its operating margin, just heading straight downward. The company's lost 159.43 million in cash flow in the trailing 12 months. Again, like its operating profits, as revenue is growing, it's just losing more money, and it begs the question, why go after growth if that incremental growth is just going to cost you more money? It's just going to cost you more cash outflow. Finally, let's look at the valuation. After soaring this year, the stock is now trading at a forward price to sales ratio of 10. This is up from a little over 6 earlier in the year, starting a few weeks ago, let's say January 26, before the stock really soared. And so I would not recommend paying this kind of premium valuation for a company that hasn't proven very much yet in terms of scaling the business, in terms of delivering profitability or delivering positive free cash flows. Yes, it's got an innovative product coming out it's scheduled to come out in March, but as an investor, you still don't know how that product is going to impact the company's financials. How is it going to impact the income statement, the cash flow statement? Is it going to be cash flow positive? Is it going to just cost the company more money as it has been in the trailing 12 months? Revenue's been growing, but it's just been losing more money. Is the new product going to help it gain profitability? Is it going to help it gain cash flow? It's too early to tell. And at this point, if you're buying C3.ai stock at these valuations, it's extremely risky, it's extremely speculative, and you're looking at a very, very high risk, and I'm not even sure if the high reward is worthwhile to take on this high risk right now, especially after the surge in the stock price over 100%. So to answer the question I posed in the headline, is C3.ai's over 100% stock price increase justified? I'm going to say no, it's not justified. It's been fueled by the hype, the enthusiasm around artificial intelligence. And yeah, it did deserve the stock price did deserve a bump because of the effectiveness of ChatGPT and the launch of its own product coming out in March. But a bump of over 100% was a little too much in my opinion. All right, so there you have it. That's all I've got for this video. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.